Hey everybody, it's Brian Shannon from Alphatrends.net. Today's Friday, the 21st of July, and we had a kind of a mixed market this week. It was really mostly positive if you take out the semiconductors, and the NASDAQ was down slightly. But otherwise, we've still got a lot of green on here from this week. So let's take a look at these charts and make some sense of it. Let's start with the semiconductors because last week I was warning that, often when we see a breakout from extended levels as the semiconductors were, that it often gets sold into. Now it hung around in this general area for a couple days, but then finally did succumb to some profit taking that brought it down to the 20-day moving average. I wouldn't be surprised to see the semiconductors come down maybe to the anchored volume weighted average price from this gap, and if that didn't hold, then we'd look at other levels along the way. Back to the S&P 500, or actually let's look at that the semis on 2 time frames here. So you can see we got below the anchored VWAP from the CPI, and we're below a declining 5-day moving average. Before we get too far into this, I wanted to announce a sale of Alphatrends. So for $799, you get a full membership for 1 year, 3 videos per day, a midday update that talks briefly about the market and updates the positions that we're in. It's a swing trade service. End of the day is very similar to this video every single day of the week. And then stock trade ideas. Every other Monday, we have a educational webinar. There's a forum page. Also, signing up for this is the only way that you can get this deal. Is you'll get a 30-minute one-on-one webinar with me where we'll look at charts, we'll talk about your strategy, what you're looking to do. You get a $99 intro to trading stock course and the advanced course as well, which is a $499 value. So please go to alphatrends.net and look for that. I will also have the post here just below in the YouTube video summary. So looking to the SPY, we're in a beautiful uptrend. That's that has not changed. It's going to take a lot to change it, just as it took a lot to change from a bullish to a bearish market over here. We're in established uptrend, higher highs and higher lows. We're getting a little bit extended, but that doesn't mean it can't continue to move higher. This is what a trend is. Just like we spoke about a couple weeks ago, this wasn't a double top. It was just a little place where the market paused. Now, next week we might see something like this, and then it comes back up to there, and then you're going to hear the same chorus of people saying it's a double top. Those are people who don't know what a double top is. I've been doing this full time since 1991. There's a lot of well-intended people out there on Twitter who have been trading for 3-4 years, and they have a subscription product, and that's fine. I don't begrudge them at all, but if you really want to learn from somebody who's been doing this for 30 plus years professionally, then give Alphatrends a look. Anyways, the S&P 500, you can see that 5-day moving average is still rising, and it will continue on Monday. This is where we were 5 days ago, so that was a week ago. We'll get rid of that data on Monday, this data on Tuesday. So, even if we pull back a little bit down in here, I don't view that as a major negative, but if we're to get stuck below the 5-day moving average, then perhaps we come down a little bit to the anchored volume weighted average price from this low right here, which is right here on the shorter term time frame. If we're to get down to that level, let's call it 445, well, guess what? We'll be in for another test of the 20-day moving average, and that makes sense. So, just with the market right at that 5-day moving average, the semiconductors pulling back a little bit, I think that the outlook remains somewhat cautious for the S&P 500. So, not bearish, but also you've got to be very aware of where you're buying. This market has had a run from 431 to 456 in just a couple of weeks. I think it needs more time to heal or to correct, if not a deeper price pullback. Back to the NASDAQ, you can see we're below declining 5-day moving average, below the anchored VWAP from the CPI, and now that puts us in for a possible test of the anchored VWAP from this low, and that would also bring it to the 20-day moving average. So this is the low that we're marking over here on the 30-minute time frame, and this is of course that high. So what I actually ought to have on all of these markets is this an anchor off of the high, which is now the year high. So, look for that to become potential resistance. If the market can make it back up through this level and then do this, that would be the case for it to heal quickly. Otherwise, I think we're still in just for a little bit of further profit taking. Back to the SPY, you can see we found supply right at that anchored VWAP from the high today. So as long as we remain below that, maybe it does something like this Monday, then just be aware of, you want to have an anchored VWAP at this point. It's only a couple days ago that we made that high, but it's the most recent relevant high that we have to measure risk against and where the buyers are in control. The Russell 2000 got pretty extended here. It broke out, as we know. It was a little bit extended at that point, but the buyers clearly had control and maintained that control. So from this point right here, that's what right here, that's what we're looking at on the shorter term time frame, is this move. So again, where does that line up? 191. Well, that 20-day moving average is rising at a pretty good clip now. So maybe that 191 level will be the place where this market finds a halt to any profit taking. Look at a 38.2% retracement. If we take this low to this high, 38.2% retracement brings it right to that level as well. So there's three things that tell us this is a possible level where buyers might emerge. We've got the anchored VWAP from the most recent swing low. We've got the rising 20-day moving average that will be met in there, and we've got a 38.2% retracement. It doesn't mean I would buy in there. It means I would be looking carefully for evidence that the buyers are in control, and then look to buy as they do gain control. Because again, I never want to buy a pullback. I want to buy strength after a pullback. The biotech stocks, we know that again that the 20-day moving average will start to flatten out here on Monday as we get rid of this data. So that will be our new 20 period. So we'll see the 20-day moving average start to do this. And over the next couple days, if the market hangs out above that 20-day moving average, we'll get rid of all this data next week. So I think that it would make a lot of sense to keep a closer eye on the biotechs. Looking to the weekly time frame, we're still in this bigger range. That has not changed. And we should actually, that's kind of the high end of the range. This is the low end of the range. There's the anchored volume weighted average price from the beginning of the year, that blue line. We've got a 10, 20, 30, 40 week moving average. They're all starting to rise once again. This is where we were 40 weeks ago. So that's the calculation, of course, for the 200-day moving average. So it's, this could be an important higher low, and we want to start monitoring the shorter term time frame to see if, we can get these moving averages to kind of do something like this, where that 20-day starts to come up through the 50-day, and then it acts as support. Well, then that could pave the way for a test of this prior band up in here, and then maybe consolidation. And, a couple weeks down the road, maybe this market, the biotechs, could start to take leadership. It's still too early in there, but it's always about anticipatory analysis. And that's what I talk about every single day with stocks, which is why we've got involved in, in mode right as it was starting to move right here. We didn't buy as it broke past this high or that high. We bought over here at $38 per share, still long a third of that for subscribers to Alphatrends. Also involved in CCK with a third of a position left in there. So these are the types of names that I'm looking at each and every day. And again, if you're looking for a logical approach to the market based on price action and market structure, then I would encourage you to take advantage of this sale because it's really a great deal. Thanks for tuning in. Share it with your friends. Give it a like or comment. Happy to reply. Thanks.